screw up the day. Hopefully you guys can hear me all right. I look down, it looks like the microphone is connected. Seems like, here, we'll take these off too. Seems like another good day. I really like the price action of the markets. Those of you watching, it looks like there's a couple of you. Feel free to chime in with any questions. I really like the platform of the live communication. It's super cool, and I love that we get to talk back and forth. So you get to take advantage if things grow, which maybe they don't. I'm content either way. Um, you get to take advantage of the fact that so few of you have found the live so far. Hopefully the plane noise isn't too distracting. Markets look great. Amazon seems to be doing really well. I don't know if you watched my other videos. I get to be like, woo! Because I really did pile into it in my trading account and put on a rather large position. It's probably 50% of the account just because I thought it was oversold and looked super attractive. HIMS has been struggling a good bit, but I've still been selling the options, collecting those premiums, and trading it, which leads me to one of the things I've been talking about, and I'll talk about Conagra a bit, which I know I've talked about a whole ton, and it's a super boring stock that nobody cares about, but I've really enjoyed selling options on Conagra in particular, but on Bristol Myers as well, and Verizon a bit, and some other super boring stocks. I even began doing it with Target. But I'm going to talk about Conagra a bit more. I did a video recently on selling puts and why I really like the strategy, and I'll talk about that as well. And again, just interrupt me if you guys have questions. I'm kind of curious, did anybody buy anything this week? Or the things you're looking at? Or the things you have questions about? I was hoping to have my laptop next to me, but embarrassingly enough, I can't find the cord in order to charge it. So I've been searching the whole house, and unfortunately I haven't found it. So I may have to run up to Best Buy or wherever and buy a new cord just to get it charged. Um, that being said, what I really like about a put selling strategy, and I'll make up a fictitious stock, but I think I used Amazon the other day, is if I want to buy a particular stock, but I don't want to pay what it's trading today, I really feel like selling puts is a way to get paid in order to leave my resting order. And I personally feel like the only risk I take is that the stock goes below my price and then above it before the expiration date or the strike date of the options. Hi, LaJuan. Hi, Dave. I hope you guys are doing well. Thanks for stopping in and chiming in. I appreciate that. If you guys have questions, feel free to chime in and ask your questions. So, if I want to buy stock X and it's trading $110 a share, but I don't really want to pay $110, but I feel like if it falls to $100, I really want to pick some up. I can look out in the future, pick a date, and look at an $100 put and sell that put and collect that money. The risk that I'm taking on, if I was going to buy it anyway, because there are more risks and I'm happy to go into it. But if I was going to buy it anyway, I get that money. And if the stock goes higher, at least I've collected that money. And if the stock goes lower but doesn't get to 100, again, I've collected that money. And if it ends up closing below 100 on the date of the expiration of that option that I sold, I end up buying my shares. So for me personally, it is a great way to be disciplined. It's a great way to get paid on cash that I'm putting to the side to buy a stock. Now, also keep in mind, I always have the cash available to buy the stock that I sell a put with. I never want to be put in a position where I end up getting assigned the shares, I get put on margin, and it potentially, for example, I do a fictitious one at $100 and it just shoots straight higher and goes to 130. Well, I don't really get stubborn about it the next month. What I do is I look for an alternative one. And if I can continue to churn 1% a month, that's 12% a year. And if I'm pushing 1.5% to 2%, that's somewhere between 18 and 24% return a year. which leads me back to Conagra. Sorry, there's some little bug on my and driving me nuts. I should have just left it, but anyway. So I've talked about this a zillion times, but this is what I really like about Conagra because the math is working out so well and how easy it is to find options that fit this criteria. If I get 15 cents, 15 cents, so we're talking about pennies, on an option on Conagra, that's a 9% yield. So if I'm selling a put, it's only a 9% yield because the dividend doesn't come into play. On the flip end, it's also paying approximately an 8% dividend. So if I can collect 15 cents on a put and get a 9% yield, and I can sell a call and get another 15 cents, I'm now getting an 18% yield. Sort of. I'm getting 9 on the put and 9 on the call. It doesn't really add up to 18%. It's a bit of a misnomer because depending on what you consider the put as a percent, like how the trade works in your mind, really you may have to consider it as 200 shares instead of 100. But you're also getting that 8% dividend. And if you get taken on the call, you get the appreciation of the stock. Now you have to pay attention to when the ex-dividend date is in order to calculate if you're receiving the dividend or if you just have to factor in the 15 cents for the call along with the appreciation. But what I've noticed is in Conagra, while it's drifted against me, I started doing this when the stock was trading above $19 a share, and it's fallen below 17, and I am still making a yield of over 20% return. Now, I've been able to stick with it because the stock barely moves and it never makes me nervous, and I've been able to continue to sell puts on the way down, collecting 15 cents each time, sometimes 10, but I'm doing it more with weeklies and bi-weeklies really than monthlies, which is really driving that return significantly higher. And then I've been reversing and selling calls, and I get super aggressive with the calls if I get assigned new shares. For example, I have some short puts for the 17.5 strike for Friday. If those get exercised, I may just sell the 17.5 call and not look to get an 18 call because I'm able to collect more of a premium, and I don't need more shares. I'm not looking to buy more. But if I can keep churning and buying and selling those puts or selling those puts and calls and continue to collect the premium, those pennies really add up and become significant. So I've really enjoyed doing it. Originally started when I was talking about the trade on HIMS, but for me personally, and everybody's different, which is why we'll get into my little spiel after, but what I found is the swings in HIMS are a little difficult for me. I've which is really kind of funny because when I used to trade on the exchange, the daily swings were absurd. But now that I'm older, I don't like the ups and downs being too much. HIMS, the swings have been too much. I'm still sticking with it because it is what it is, and I keep reminding myself that it isn't that huge a trade. So I've just kind of stayed with it. But when it went up, I should have taken some profits instead of I sold like 95 calls instead of just getting a little more aggressive. Anyway, that's just. But what I notice is I don't like the high volatility ones. The low volatility ones work out for me. And Dave is sharing for those not watching who may watch later. It looks like he sold a few puts in Chipotle recently. Um, Dave, so did I sold the 30 strike, and if I get assigned them, the same as I said about anything else, I'm totally fine buying 200 shares. I sold two of Chipotle at $30 a share. Now, my personal opinion, now I'll say my little spiel, which is, oh boy, let me try this name before I answer Dave a little bit. Refizzlecutator Tirage. Yo, right back at you. Anyway, Dave, my concern with Chipotle is it still has some downside. At the same time, I, my attitude long term, if I stick with it for 5 or 10 years, they'll do just fine. I'm not super concerned, even if the stock drops to 20, which I don't really think it goes that far, but it's a small enough investment for me. I'm not super concerned. and I think over the long run, Chipotle is just fine. The funny thing is, if you go back to when they originally did that stock split, and it was around $50 around the split, I did a video about shorting Chipotle, and the reasons before it is, or the reasons I thought is, a lot of times I find a stock does a split when earnings are slowing and they want to get more people involved, and they also want people trading the options supporting the stock price. Then what came next was Brian Niccol left and he went to Starbucks, and I am a big Brian Niccol fan. I mean, he took Chipotle to what it is today and really crushed it, and I figured they would struggle going forward. And quite honestly, we went there, I think it was yesterday, but my wife and I went, yeah, yesterday, and I got to tell you, I was super disappointed, and only in a couple things in particular. And maybe it was just me, and maybe it was just in my head. But I said to my wife, like, the staff was so grumpy, and I don't remember them being so grumpy and so abysmal. Like, it was just not a fun experience. At the same time, what I like about Chipotle was what I used to like before. I think it is a great value. I mean, she and I went in there and spent $20. We don't get sodas, we don't get things on the sides and stuff like that, but we both got a bowl, and then we each got like a fajita, I think, as well, or a tortilla, to be able to make a little burrito out of some of it and eat the rest. And from my standpoint, $20 for the two of us is a bargain. I mean, we don't really eat McDonald's or the other stuff, but my buddy was saying like they go there with his wife or friends, and it costs more. And at least at Chipotle, maybe I'm tricking myself. I feel like it's a little bit healthier, but maybe not. And we don't go eat that stuff very often anyway. We eat at home 90% of the time. Um, to answer you, Rafizzle Tighter Taraj, I am from Las Vegas. Feel free to chime in when where you are from as well. Um, that's funny. So Dave's sharing. They opened their first store where he's from, but he's never even tried it. They have a decent product. Um, to be perfectly fair, I'd compare it to like what's the chicken place? El Pollo Loco, which I haven't been to in years either. My buddy was actually complaining about it, where they have, the baked chicken as well as the fried, and you can get the grilled, so it isn't like overly oily or breaded or like some of the other places. It's primarily. Thank you. I appreciate the kind words. It's primarily, some grilled meat and veggies and stuff. And if you stay away from the sour cream and the guac, you're and the cheese, you're getting like beans and lettuce and tomato and stuff like that. So it's not a terribly unhealthy product if you target it properly. And again, I mean, we probably go once every couple of months. Usually during the day, we don't go out. My son's at school. I tend to watch the markets or work or have something going on, so we don't have lunch too often, and that it's not somewhere we'd go for dinner. And at night, my wife, she's a phenomenal cook. I mean, I should put up little pictures. I wish I was good at that stuff. She'll make like lamb shank and chicken parm, and she's Chinese, and she'll do all sorts of Chinese dishes for when my son comes home from school, and vegetables and stuff. So we eat at home most of the time, and we typically go out once a week on the weekend. So, but anyway, back to the point. Chipotle, I think, is just fine. I mean, I've told this story a zillion times about McDonald's when I bought 100 shares back in the late '80s, and how well it did over that time frame. To me, Chipotle is a bit of a similar type of story. And my guess is if you stuck with it for 20 or 30 years, they continue to grow and they continue to do fine. Um, I was watching one of the commentators on CNBC today who I like, and I usually hate most of them, but she does a good analysis, and she's rotated out a target, which is one of my stocks that I talk about that I like because I think it's super undervalued, into Starbucks. But because Brian Niccol is there, and she saw one of the things I did, which is the stock shot up to, I don't know, around $110 or $115 when he was appointed the CEO, And that has all been taken away, and it got back down to $80. And he's still the CEO. And I think he is an unbelievable operator. They're finally getting same store sales up and everything else. Like, things are looking good. And it's discounted back to where when he got into the position. So I think you're getting a really good value at Starbucks too. But it's a good opportunity for me to say, please, anything that I'm sharing, it is not financial advice, just entertainment purposes only. You guys need to do your own research when making those decisions and reach out to a financial planner. I am not a financial planner, and I like this stuff, so I talk about it. And I don't always dive deep into the numbers. Like, I look at them and I listen to the quarterly reports on the companies I own, especially if I have a really big position. But I do that on purpose, not because I don't understand it, not because it's difficult to do. It really isn't. And I took courses in college as well as high school, and I used to sit and go through the numbers really in depth. But here's the problem. And the guys who do them, like, they have really entertaining videos, but here's the difficulty with it. And I'll kind of make fun of one, Everything Money, with his whole, like, he's built this system that you plug in, and you kind of like say how much you think it's going to grow over time and what PE you would give it and everything else. And it gives you a high, a low, and a middle range of where it's going to be. What a crock. I mean, and I'm not like, first of all, these guys have incredibly sophisticated accountants. So if there's something they don't want to be showing in the books, it won't show. And if there's something that they want to be showing, it will. It also doesn't account for like one-time expenses and things of that nature, but it is so beyond complex that sitting there and looking at the numbers and making judgments and thinking that you're going to have some advantage over A, computer programs, and B, the insiders who know what's actually going on, is just a way of giving yourself some comfort, but it's really just kidding yourself. There is no way to like beat those systems and to outperform in that way. Dan Niles was talking about where he envisioned, shit, which stock was it that he was talking about? I really like Dan Niles, and I think he was talking about Meta and his expectations this year. And to be fair, he's been right, which is my largest position. I kind of ignored him a bit. But he talked about the difference this year from things like when Easter was in the year, because it's 2 days different this year versus last year. So that lays differently in the quarter, and that's going to impact earnings. To like, they put all of that to show how micro it can get into their algorithm and their computer systems to be able to generate what they think earnings are going to be. If you think you can go through these books and take a guess and beat that ability, I think you're totally crazy. And then on top of it, being able to predict the economy on top of it, none of them can predict like the ebbs and flows of the economy and where things are going. To be able to figure out 2 quarters out, are things going to start slowing down because the economy may slow down? Like, even the companies can't take that into account. So it's very hard for them to really predict out. And you find me somebody who can actually predict the future accurately, sure, maybe they can outperform. But for the most part, my attitude is A, pick great companies. B, pick great companies when the news is bad and they're out of favor. And in the long run, you will crush it. I mean, that's what United Health was. That's what Boeing was. That's what Target is currently. And I know sometimes it's not stocks people want to own, but even Google, I mean, it was so out of favor for so long. And now it has just like become the opposite. So again, for those of you who watch this later and aren't able to read the comments, Dave sharing that he tries to do the research, but it feels overwhelming. I like just buying good dividend stocks and some growth, and that's exactly my point. If you stick with good companies, because the research is overwhelming, and I don't really think there's a benefit to it. I think it's a lot of, I hope that's not too loud. I apologize if it is. I'll give it a half second just in case that noise is too distracting. Anyway, Dave, I think doing all that research is overwhelming and doesn't help. I think you just make yourself nuts. Now, it can give you confidence in the conviction of buying into a great company, but if you buy what you think is a great company, oh, excuse me, I think you do phenomenal. And here's the deal on top of it. Over a 20-year time frame, great companies are just that. They're going to be great, and you don't have to stress so much. Oh, there's no sound? Is nobody are other people having problems? Dave, if you hear, are you able to chime in and let me know if there's a problem? Because somebody's saying that we're having trouble with the sound, but it, it looks like it's on. Oh, okay. So maybe it's just something on his end. Perfect. But I think if you stick with great companies, whatever they are, like a McDonald's, I don't know. I mean, Johnson and Johnson, Coca-Cola, and all of them, they're just fine. They're a little too, no problem. I just wanted to make sure that in some ways they're a little too boring for me. But Chipotle is a good example. If your time frame is 10 years, whatever's going on now isn't going to be going on in 10 years. And if the stock continues to grow and they open more stores and they do just fine, well, it'll be okay. And that's kind of my attitude with any of it. And I try to take the guess and try to pick what I think is the best companies. And I think the Mag 7 all fits in that. I just don't want to be too heavily weighted into it because for the most part, I don't know how many of you have seen my videos, but I set up primarily different accounts for different things. And most of it is in what I call my set it and forget it account. And I do exactly what you're talking about, and then I don't even watch. It is an old fashioned account. You cannot trade online. There's no access to request checks or do anything through computers. You have to call up the advisor and ask him to, and he knows everybody by name, which I also find really nice. He gets to know his clients. But I like that because I don't worry about people being able to break into their system because you can't. But it also allows me to just leave things alone. I might make 2 or 3 trades a year, and I mean, I might, but for the most part, I own companies that I think are great companies. And I do buy a little bit, and I mean really a little bit, of things that I take a shot on that I think maybe I'll get lucky on. Like, I think I own Loan Depot and Portillo's in there, but I own less than like 1/2 of 1% of the portfolio value. But for the most part, I own Amazon, Google, Meta, Chevron, Starbucks, um, what else? Cisco, not the food company, the networking one. Um, Nextera Energy, I have in there. I do have Intuitive Surgical, and I have Shopify, but Shopify is a great example. I put less than 1/2 of 1% in there years ago and have gotten pretty lucky, and now it's shot up and it's a decent position. Um, so I most of those, like, I don't do anything with it. I just leave it alone. I think they're good companies. So I have 2 questions. I'm going to start in the order they came in, but I'll answer both, I promise. So Tom is asking, if they end the shutdown, do you think the market will gap up or is it already baked in? I'm thinking making my double calendar tent a little bigger. It's a great question because because I thought they were going to gap higher if they came back into session. And it seems like people got overexcited about it yesterday. And now I'm beginning to feel like it's already baked in, but I'm still leaning towards it gaps higher. I mean, the economy seems to be doing okay. It's slowing how they were hoping. But the real reason I'm still super bullish, I mean, uh, every time Tom Lee and some of the others get on CNBC who are bullish, I feel like we chat, and we don't. Like, I'm not trying to say this as, but really, when I look at what's going on with this administration and what their plans are going forward, to push the Trump administration is going to put people in the Fed that are going to expand, especially if they're in the US. Companies to be able to expand, they're pushing a lot of money into the system. It's hard for me to imagine that things slow down as all of these things are coming together. As the rates come down, and that doesn't necessarily mean mortgage rates, but as the Fed cuts and the short-term lending, which helps with payrolls and how companies borrow in terms of the way that they take on debt, it allows them to continue to expand. Then loosen the regulations and allow them to expand. Well, it's like putting gas on the fire. And if you weaken the dollar, which seems to be what's going on as I see other currencies get stronger and even the gold and everything else, I don't really see what causes a huge pullback. Now, I've talked about this in other videos, Tom, where what I actually kind of wonder and worry about is, do we go parabolic? And I'm half waiting for that to happen to make a big trade on it, but I haven't seen it yet. Like, I think we're just still in a bull market, and if it continues the way that it is, maybe we don't get that parabolic move that I'm looking for. But what I'm hoping is over the next 2 years, before we get into the election season in, what is it, 2028 or 2027, that we've seen the markets really take off and potentially get really disengaged or disjointed from all reality evaluations. And that would be the only thing that I would look to actually sell some things and get on the sideline. Otherwise, I mean, it just seems like people are always nervous. The unemployment stuff, credit card debts, the cost of housing, the cost of living. When I was a kid back in like the 80s, I was born in the 70s, but that was just kind of how life was. Things weren't so inexpensive. I think we had a 20-year span of no inflation. And now that we're having inflation, a lot of people who are younger aren't really used to it. And to me, this is like what normal life is. Things aren't always affordable, and you have to think about the things you buy. You can't just go out to dinner every night and travel all the time on every time that there's a break for school, and kids having a zillion toys. Like that was not realistic when we were a kid. I mean, we were lucky to get a toy from time to time, and it was pretty much playing board games because money was tight and inflation was always around. So anyway, my point is, I do kind of think we'll gap higher. Um, even I may have to switch. Let me see if this one works, but it did, or I can unplug. But it shut off for some reason. I find once it does, it continues to do that. So let me know if this is weird, because I'm putting them both on to make sure one of them stays on. Because I find once one shuts off, it shuts off for good. Okay. Um, but I like healthcare, and I think it's going to be out of favor for a while. And I think once things are more clear, it will allow them to go back up. And recently, I think it was with the what are they called? Like the Ozempics and the other stuff. They have a term for those drugs, but they're going to lower those prices to make them more affordable to consumers. But they're also going to allow the doctors to prescribe it easier, and they're going to allow them to make more sales. So it's like this double fold where they make them lower the price, which sounds like it's a bad thing, but then they're going to double or triple the amount of them that they sell and allow them onto the market easier. So they really end up making more money than they were before. I find that's typically the deals that happen. They end up going in and making something more affordable for people, but they still help the companies at the same time by allowing them to sell more of it. I think that's a little of what happened with Obamacare. Like they went in and they made it sound like it was going to be so bad for the insurance companies because, people who couldn't afford insurance were going to get lower price. But then on the flip side, what did they do? They charged people who could afford it even more, and everybody had to get insurance. So all of a sudden, instead of selling to 1 out of every 5 people, you're getting 5 out of 5. So they're charging a little bit less, but you're selling way more product. I think that'll be across the board with healthcare, and I think all the healthcare stocks are going to benefit. And from what you're saying, it looks like you were thinking about the increase in sales with lower prices too, seeing the same thing. And yeah, this one shut off again, so I'm glad it's still working. But that's what I see tends to happen. These government deals are almost silly in some ways, where most of the time they really do end up benefiting the big companies in one form or another. So I see when they're selling off because everybody's getting nervous as to what's going on, that's actually opportunity. Similar like United Health. I, I, what a great opportunity to buy it is. Look, there were so many things going on to drive that stock lower. Let's start with the CEO got shot, and half of the public was on the side of the kid who shot them. Now, just for straight, nobody should be shooting anybody. I don't care why, if you think it's the worst company in the world and what's going on. This guy is a guy with a family and a life and doing his job. And maybe you don't like the company he's working for, but that is just what he does for a living. And everybody makes tough decisions. Anyway, but since half the public was on the side of the kid who shot him, they were happy to sell off the stock and just pummel it and beat it up. Then they had a bad quarter and another bad quarter, which sold the stock off even more. Then you had the new CEO step down, and all of a sudden, the Department of Justice stuff coming along. And all of these things drove this stock from $600 to $250. In the meantime, how many companies or people or anybody who had monthly plans with United Health made any change to that? And I would say less than 2%. And that's just me guessing. I have no idea, but I don't think anybody made any changes to any of it and just continued along the path they were doing before. If you're MGM or one of the casinos and your account is with United Healthcare for your employees, I highly doubt that anything going on with the media, the CEO, the bad quarter, the CEO leaving, and the Department of Justice makes any of your decision making change, and you probably just stick with your policy. So their revenue is going to continue. Maybe they had a couple of quarters where too many people were making too many claims, which is kind of what they said happened for those quarters. But that stuff ebbs and flows, and eventually it'll go back to normal. So sometimes all of the bad news coming out that makes a company collapse just creates an opportunity to get in as an investor. I see those as really good opportunities, and they don't come along all that often. It was the same with CrowdStrike. And I got to tell you, I chickened out. I bought some, but when CrowdStrike had that outage and the stock just collapsed, my brother's comment to me, who is a financial advisor, and I am not, just as I don't know if I have to say that or not. But he said to me, if CrowdStrike going down for a day or two impacts the world that much, how important is their service to the world? and these guys need them. So I don't care if they have a bad quarter or two from it. That shows you how valuable what they do really is. And he plowed into it decently. I bought some because that made a lot of sense. Uh, Again, like, you kind of have to look at what's going on in the negative news and step away from it and not see it as this end all be all in the moment, and recognize what's it going to look like in a couple of years. Same with Boeing when they were having their bad news. And I'll do my little banging on this. If Steve, if you're watching, which I know you don't watch, I'll laugh at you a little bit. This is what I love about Target. I mean, there's so much bad news around Target, and their earnings are just fine. In 5 years, nobody's going to care about all the negative stuff about the woke, about, you know, them doing whatever they were doing and needing to close stores and the people stealing from them and whatever else. Give it. I mean, I don't even know if anybody remembers already, but in 5 years, what's going to matter is their earnings, and their earnings are great. Their PE is super low, and they're paying like a 5% dividend that only uses 50% of their free cash flow. I mean, they look super strong, and all of their all of their financials look great. Okay, well, maybe the bad news is right, but I think you have to kind of separate and look at what will it look like in 5 years, and maybe they become a Sears and nobody cares about Target. Um, what do I think about Larry Fink? Is if they make their policies based on people's insecurity. Also, what do you think about the meeting of the biggest company CEOs in Arabia? Uh, Same thing. It's all kind of noise to me, and I don't watch it that carefully. Um, I really don't. I mean, I do watch it all, and I think it makes good entertainment. Similar to, it's kind of how I watch like the elections, um, but it's a little bit of in one ear and out the other. Um, get Geronimo. What's up, big guy? How's it going, Geronimo? Are you buying the dip on Target? I have been the whole way. Yeah. I've owned it from, I want to say, so I'll date back a while ago. It fell back down to these levels maybe 2 or 3 years ago. Then it shot up to like 160 or something. And I had bought it and I got out. And then I started buying it back, I think around 120 or so. So I've been buying it all the way down, and I continue to. And was what I just commented. Like, it's very hard for me because their financials look fine. If I remember correctly, they're trading at like a current 12 PE and using less than 50% of their free cash flow to be able to pay a 5% dividend. If I felt like I could comfortably get 5 or 6% return in dividends on my entire portfolio in a company that I don't think is going out of business, I'd probably put 100% of my money in that. Like, I'd be fine with getting 5 6% return going forward. I wouldn't put. I don't want that heard the wrong way. I wouldn't put all my money in anything because I don't feel like you're ever that comfortable. But you know, I don't know. I think they're super out of favor, and that's kind of what I look forward to. I appreciate your take on investing. I've made mistakes along the way trying to harness the Buffett outlook. Trust me, I've made some huge mistakes along the way too. No way to avoid them, and it's how we learn. What I, for me personally, my biggest mistake is veering away from big and boring companies and taking shots on things because the excitement of when they hit and whatever else. Uh, I'm a bit of a gambler, and I don't mean like I don't really go to the casinos, and it's not it, but meaning in the markets when you buy that $5 stock that shoots to 50, it's very hard to start like not doing that. But the reality is, when I've put most of my money in the Amazons of the world, and then wake up 10 years later, I find them very happy. And it doesn't have to be Amazon. Oh, excuse me. Sorry, forgive me. It's very easy to point it at, the Mag 7 and be like, oh, but, even if you do it with, I don't know, Any stock, any born, Starbucks, which has been struggling for a long time. My guess is if I go to sleep and wake up in 10 years, I've done just fine. I mean, maybe I didn't hit it out of the ballpark. I guess it creates a good opportunity. I'll tell the same story from when I was a kid. You know, when I was a junior in high school, my grandfather gave each of his grandkids $10,000. I'm guessing like back then I was super excited. He didn't tell us why. Looking back as an adult, I'm guessing it's when he found out he was diagnosed with cancer, and he wanted to see his grandkids have fun. But he gave each of us 10 grand. My mom took it from us, and I was all upset. And I remember going in her room and just being like, Mom, can I have my money? And she's like, What do you want it for? And I know I shocked the shit out of her when I said I wanted to buy stock with it because I can still picture the face that she made when I asked. And she kind of looked at me funny and she's like, "Oh, okay, we'll go write down the companies you're interested in buying and show it to me and we'll go from there." So the companies that I wrote down was Chrysler, General Electric, Eastman Kodak, McDonald's, and as long as I've been telling the story, I can't remember the fifth one, but there were five of them. So she looked over the list and she was like, I think she was the same thing, a little bit surprised. They're all big and boring stocks that everybody at the time knew the companies. And she said, Sure, sure. Now, at the time, and it's kind of funny because they didn't have free trading like they do now. But Charles Schwab had opened up and they were the first discount broker. Prior to that, you were paying like three, maybe $400 to place a trade and buy 100 shares. Like it was terrible. So unless you really had tons of money to invest, and it didn't make sense. The only ones really making money were the stockbrokers at Smith Barney and the like because of how much they were charging. But Charles Schwab had opened up and they charged either $29.99 or $39.99 or something like that. I remember going in, giving the guy my list, and him saying, okay, and kind of shrugging his shoulders, me being like, can I buy 100 of each? And I was a kid, and 10 grand was a good amount of money. So he's like, uh, you sure? And I gave him the check. Anyway, the point of the story is Eastman Kodak went out of business. Chrysler went out of business. The ticker symbol GE that you see today is not the GE that I bought back then. And they've done like a reverse stock split and pretty much went out of business. And the only one that's done well is McDonald's. Well, if I still had that McDonald's and kept all the shares and when it split, just let it run, which I didn't. Every time it split, I was overexcited as a kid and I would sell 100 and I would go buy myself something stupid and keep 100. But if I still had it, and God forbid I put it in dividend investment, I never did the math for this. But just those 100 shares would be over $250,000 today. On top of the fact, the dividend that I was getting at the time was $8 a quarter, which I used to laugh at. And on the 100 shares that I still have, I get like $100 in change today. So I would have 800 shares. I would be getting over $800 a quarter, and that means over a year because I paid like $22 or $23 for the stock. That would mean I would be getting more in dividends right now than I paid to buy the stock. So it's been 38 years. It's a super long time. And throughout that time, the ups and downs, it fell in half more than 3 or 4 times. So there were some big swings and it might have been stressful. But if I just didn't pay attention and I left it goes to show, and even if you take that whole investment, that 10 grand would have turned into over $250,000. And it's kind of why I say if you stick with just big and boring companies, you don't have to be perfect. If things go out of business, if things don't go your way, and you just leave it alone, it's why we talk about the buy and hold. Just stick with good companies. So I'm comfortable that if I pick five Starbucks, because Geronimo's asking about it, and put my money into five Starbucks, even if I'm wrong on three of them and they go out of business, the ones that do well, one of them will do really well, and one of them will do just fine. And in the end, I'll do what the market does and end up okay. Now, I like watching, I pay close attention, I like the ups and downs, so I have a trading account, not just to set it and forget it. But for the most part, the set it and forget it does really well. Geronimo sharing that he has 25% cash right now as well. What to do with the cash? I think back to the point of the story, I think both Novo and Merck, like they all fit into that category. Or depending on how much, I'm guessing since you're naming a lot of stocks, you like owning individual stocks, which I do as well. But to people who don't pay attention closely and don't like to pit themselves against the market and see if they can outperform, really, I think VOO or QQQM make an awful lot of sense. You know, Similarly, we had mutual funds back in the day, and between the fees and the fact that maybe the people who made the investments didn't do as well as the market anyway, these ETFs create incredible opportunity. When I look at what VOO charges, which is almost like a joke and barely going to impact your returns over time, or QQQM, I just see them as great opportunity. And it's just an algorithm that kind of owns the market. You own the S&P 500 and QQQM. I mean, in VOO, or SPY is okay too. And then in QQQ or QQQM, you own the Nasdaq. And what a great way to just perform how the market performs. I've told my wife and son have to memorize those two tickers, because what I've told them is if I get run over by a bus tomorrow, sell everything, put 60% in VOO and 40% in QQQM, and never look back. And so I make them memorize it, and I'll say to them, "What do you do in the markets?" And they're like, "VOO, QQQM," but they don't find the markets interesting. So Dave is saying it was not easy to invest back then with the fees and the information right. The library had some of the monthly published investment research. So you're probably as young as I am, and yeah, I remember, I would go to the New York Times and read the business section, and CNBC had started and it was on TV, but it wasn't what it's become. And even today, it's not really super informational. Like, it's more like I said, I watch it like anything else. It's more like entertainment. But correct, back in the 80s and even into the 90s, it was very hard to get the information, and it was delayed. I mean, it wasn't like I could just know where the market was or put trades in online. It's just amazing how the technology has changed things. And look, to tell, like, when I was in college, I interned at Merrill Lynch because I thought I would want to be a stockbroker. Two great things from that came from that. One was I knew within a month I didn't want to be a stockbroker, because what I recognized is, oh my God, it's total BS sales. These guys knew very little about what they were selling. What would happen is they would get a piece of paper on the desk of what they should call and tell their clients to buy, and usually it was just something boring. And I recognized even in college that, man, that's probably their funds getting out of the things that they're calling and telling their clients to buy. So they'd all pick up their phones and tell all their clients, you should buy AT&T. And like I said, it was usually something boring like AT&T, and it just made no sense. And I don't think they were really doing a ton of research about what they're telling their employees to sell. I think it was based on the trades of the company. So what I recognized is it was nothing like what I thought it would be. I thought a stockbroker got to study the markets and they had better information to it and they could help their clients build their accounts. But to me, they were just glorified salespeople. So now I knew that wasn't what I wanted to do. It also kind of made me be cynical about the industry and question all the information I get, so that I don't trust it, which is kind of why I say that about the numbers and digging too deeply with what I'd said before. So instead, I couldn't have been more fortunate with timing. When I was graduating college, my brother had moved out to Chicago. He was working at the Chicago Mercantile Exchange. And he's like, oh my God, this place is the coolest thing in the world. You really need to come out here and check it out. So I did, and he couldn't have been more right. And in time, both he and I were trading at the exchanges, which was an unbelievable experience. The whole point of that was, though, the technology did the same thing to that. As computers came around and people were able to trade online, I was one of the guys on the floor doing the yelling and screaming and the hand signals, and towards you is buying, away is selling, touching your face is quantity, out here is price. Like, it's kind of funny. I tell people who see it on TV saying it looks like chaos. I go, well, if you saw a football game and you didn't understand the rules, that would look like chaos too. But once you know what things mean, it's no different than a football game. So the computers came around, and in the beginning there used to be guys standing on the side of the pit that would be holding these handheld computers, and you could see where the market was trading online. It was generally wider than what it was in the pit, and over the next couple of years you watched the online market get tighter and tighter and better until it almost mimicked the pit. And by the time it was mimicking the pit, it was actually a better indication of where we were going, because if we're all stuck a certain way in the pit, we're going to try to lean the market to help us try to get out of our position. And online ended up being a little bit more true. So you could see the market creeping higher if we were all stuck the opposite position on the computer screen, because the real flow of the market is the real flow of the market, and the paper is going to move it where it goes. And eventually, the online trading was tighter and better, and all of the trades started going from the floor to the computer. And eventually, the job just didn't exist anymore. So I've watched things progress in terms of the trading floor and technology and everything else back when I was younger. So when I see the technology in other industries and how fast it's going, it really doesn't surprise me. And I hate to admit I don't have a whole lot of sympathy, because I was put out of my job back in the early 2000s when this all went on, because I thought I would be on the floor forever. Um, it it's fascinating to me too, Dave. And again, for the people who watch the video later, he's saying it's fascinating to me reading about the trading pits and how it worked. It was the coolest thing in the world. And when I tell you, it was like being in, I gotta imagine people who play sports or other things feel similar, although there's really no age limit for the trading or anything else. The camaraderie and the joking and the fun and the atmosphere, along with the fact that if you were good at it, you could do incredibly well. I mean, I had no idea how spoiled I was. So the market would open at 7:20, and most days I was done by 9 o'clock, and really probably by 8:30, because it's so busy that first hour, and then it slows down. And then the market closed at 2 o'clock. So most days we'd come back at like 1 or 1:30 and then trade the close as well, because there'd be another bit of trades that came in the market, but it was much different than the open. And oh my God, I was making more money than I could ever dream about, working a couple hours a day. And I was so young, I had no idea. Like, I was so stupid. Like, I didn't get that the rest, how hard it was for the rest of the world. And I hope that doesn't sound the wrong way, because I look back at myself and want to smack myself, because I remember when things started slowing down and the computers were coming around and the trading wasn't quite as good, being so spoiled that if I could only make $300 to $500 a day, I didn't think it was worth my time. And then it became really hard to transition back into society, because so I was really lucky. I had done well. I had a good amount of savings, and I saved it. I didn't spend like most of the guys were partying and doing drugs and going out every night with the girls and everything else. I was like a hermit crab, and I was excited about how much I was making, and I would sock it away. But I lived pretty small for what it was. I treated myself to a couple things, but either way, I remember at the end recognizing that the opportunity was done. and thinking, well, maybe I'll go work for a hedge fund or something else. And they didn't want me because I didn't have the right experience. So I would apply and I wouldn't get the job. And then I got one offer. And the offer was like for 50 grand a year. And I remember they said like 50 grand. And I kind of was like, for a whole year? I was such a, like, if I could go back, I would probably take that job and get on the normal track and recognize, like, yes, and stick to it. But as much as it was great, it really kind of made it very difficult for a lot of the guys later on. One of the largest traders in the pit that was phenomenal, and he was probably making millions a year. The last I heard is he's driving a truck. It's just really interesting how it changed a lot of the people's lives. At the same time, man, it was so much fun. I mean, people just the jokes and everything else, calling one of the big brokers, and yeah. So it was really fascinating. There's some really good books about some of the trading life. Like for me, it started with Reminiscences of a Stock Operator is the first one that talks about the bucket shops and the progression back way before, I was in it or anything else, and how the markets work. But even Pitbull, and then Jack Schwager wrote a book where he interviewed a bunch of the traders, and those are great too. Um, yeah, Reminiscence of a Stock Operator is probably one of my favorites, and I've read it a few times. My understanding is the real guy ended up killing himself in the end, and I'll tell you, the ups and downs, a lot of the guys, it's tough. But what is Market Wizards, I think, by Jack Schwager, and the Market Wizards too. They interview Randy McKay, who I was friends with, so it's super cool to me. And Randy, like reading the book and learning about his history as well as kind of knowing him, was super cool. Like my buddy Howard, who I was real good friends with, and his son Cole, and everybody else who I still talk with, he and Randy and this guy Mike were good friends. And Randy was a really unique character, but learning about his history, about being in the military and what he went through, I think it gave him a lot of courage to be able to take on risk that others may not. And his big trade, so the British pound was pinned to a dollar amount that essentially the government said it wasn't going to allow it to get through, and it kept bouncing against that level and eventually just kind of got stuck. And he kind of recognized, at some point they're gonna have to release it, and he bought a ton of it, right? For like it's at what's called locked limit, and you can buy as many as you want, and the government's just saying we're not going to let it go, and he just did. And people don't usually trade that big, and it's kind of cool hearing those stories. So Market Wizards is a great one. So is Pitbull, if you like Reminiscence of a Stock Operator. Um, yeah, so Tom's asking, were they market wizards because they were gamblers or because they had ideas that no one thought of yet? Um, most of the people in market wizards are phenomenal traders, and I don't know that I'd call them gamblers. Like even the story with forgive me, with Randy, he's willing to take on risk, but he's a really bright guy in his analysis. And Market Wizards has a lot of guys who do technical charting and other things. But what I like about those books, as well as Pitbull, who Dave's asking about, is that it talks about traders. It's not, some of these others that just talk about how to analyze and everything else. Analyzing is great, but it's way different than having the trade on and dealing with the ups and downs of it and trusting your conviction. Market wizards, these are really some of the top traders who've done exceptionally well over long periods of time. So maybe they're gamblers, but it's hard to be too tough on them and say they're just gamblers when the success has been over years and not like somebody who just had some lucky year. Um, Pitbull, I don't remember much. I remember it was a fun book, and it probably is less. It probably gives less good information about investing, but I think when I was trading, it probably was an exciting thing to watch. And to be fair, Tom, like I think about the stuff I did when I was a trader, and as well as I did, I don't know. Like our advantages was knowing who was who in the pit. But I also think about the amount of risk that I took on, that there is no way I would be able to do that today. All the things that they tell you not to do are the things that you do as a floor trader. Don't average into a loser. Well, I hate to tell you, all we did to make money was average into losers. Like if I bought the market and it went higher and I got out, I was done, great. But if I bought the market and it fell, no, I didn't really just sell and take a loss. I would just buy more and more and more until it went too far and I got angry. And then I would buy way more, like a total moron. And I think about that now as adult, especially because obviously, like anything else, I was successful on the floor. So I started trading from home a little bit. I might put on 50 contracts or 100 when I was on the floor. When I tell you trading two of them can have very big swings from time to time, I just think, what the hell was I thinking? And thank God I was that stupid to have the success I did. But I don't know. Maybe we were just gamblers. I thought I had more control than I probably did. And here was the real advantage of the floor. I know that Bryce works for Morgan Stanley. I know that Mike works for Smith Barney. And Ted fills the orders for Chase. Killer fills the ones for Goldman Sachs. Everybody had a badge. That's what Killer was KLR, and Solly was SD, who filled paper orders. But all the banks, and the banks are on direct headsets with New York. We're the yen against the dollar, and they're the dollar yen, and we move inversely. Well, the big traders work for the banks, trading the dollar yen, and every time they're selling the market, the buy orders come into our market. Well, all you had to really do was watch Bryce and Mike and Ted and the others and know when it was the bank traders. And when they all started doing the same thing, you just kind of jump on board. So they all go two bid and you go three bid. And it just works like that. And it is a huge advantage that you don't really recognize, other than you start to understand the semantics of how the pit works and who moves the markets, and why it works that way. When you look at a computer screen, you have no idea who's who. And the markets just move how they move. So I don't know when it's a Morgan Stanley offer, or any of the others. I just see bids and offers just like everybody else. That advantage is beyond an advantage. And if you're only trying to make 1 or 2 points in the floor, when the banks go two bid and you go three bid, the next thing you know, they're going to go four bid or five bid, and you can get out of your trade. And you can do that all day, in and out and in and out. And that happens multiple times a day. It's not like this rare once off occasion. It happens all day, every day, and it's just such a huge advantage. It's not what people used to think, where people just are cheating or this or that or the other. It's just knowing who's who in the market. And the other advantage is, so primarily, Morgan Stanley was the one who was the most active between New York and Chicago, constantly on a direct headset. You had Bryce and his clerk, and he was constantly making markets. Well, he recognized that if you're sitting there going, so hands facing me means a buyer, price is out here and out of habit. So I'm going 2 on 5, 2 on 5, means I'll pay two, which is the last digit, for 5 contracts. Well, if the market is turning and it's going one offer, meaning I'm already going to be down money or whatever, Bryce did not typically walk in the pit, because he knows the only reason I'm bidding two, sorry, a fly, or mosquito, isn't necessarily because I really want to buy the market. It's because I'm just making markets at the exchange. So he doesn't come in and say, sold, I'm now at one. He just kind of looks into the pit and goes, at two, at one, and he might even make eye contact and allow me to buy those 5 if I really want to. Or he allows me to put my hand down and not do them. Same opposite thing on the computer. Like if the market turns like that, and I put a bid in to pay $2 for something, and the market's going to be $1 offer, I'm filled, and it's against me. Whereas in the pit, that opportunity where he makes the eye contact allows you to decide, did you really want to buy it, or were you just making markets for paper orders? And to be fair, if a paper order came in, I would have had to honor it and buy the contracts at two. But if it's just nothing's going on and the banks are now one offer, well, odds are I was just sitting there going 2 on 5, 5 at 4, 2 on 5, so that I'm making markets for the paper orders. And as the market changes, again, the banks don't sit there and say sold and just stick it in your face. They just come in and let you know that the market has moved and you can decide what you want to do from there. Those two things are beyond an advantage. And it's a game changer for being able to day trade. That trading stocks, or even if I wanted to trade currencies, it completely is different online. Um, did I? Yes, on the job. Tom's asking, did I learn all of this on the job? It sounds like a lot of trial by fire, and 100%. It is nothing that you can learn in advance. Now, I took the class that taught me the hand signals, and then this guy, Mickey Hoffman, used to teach a class that would teach trading, and they would set up a fictitious pit, and the pit, the prices would move up and down, and it would teach you the mechanics of bidding and offering and writing it down, but it was fake money and whatever else. That class helped in terms of being able to do the quick math in your head and knowing if I buy 10, I now need to sell 10, and if I've only sold 7, I have 3 left. But it doesn't teach you any of the it's like anything else in life. It doesn't teach you any of the reality. And yes, you learn 100% on the job. It is a ton of trial by fire, as you say. And yeah, and how do you learn? People rip you off, take advantage. Like in the beginning, I don't recognize this, so I'd be bidding on ones or twos, and the guy behind me would see the bank offering coming in, and he'll be like, I'll sell you two. And I was all too happy that but meanwhile, he was just, and now that I stealing from me, like instead of, and nobody explains it to you. He's happy to sell it to me if he knows the banks are coming in and now selling it there. And I think back, and I became friendly with him, John. If God forbid he sees my videos, good about. But John was just screwing me. Yes, there were fights. Yeah, for sure. Not often, but it happened. Um, uh, I'm pretty good about. You see, I'm pretty mild mannered, and I remember there was a guy who stood next to me who was driving me nuts because at that time I'd been trading for a few years and I was decent at it. Forgive me, but a new guy who he used to be a professional boxer was standing kind of close to me, and I'd be like, two hands is more than five. I'm two bit, and he'd constantly, I'm 3 on 1, and you try not to do that to each other, even though we do it to the banks. Just you kind of start to understand the ways that things work, and so I got mad. Hey, Jimmy, and he's like, "You want to step outside?" And I'm like, "Jimmy, you are a semi-professional boxer. If it would make you feel better to kick the shit out of me, like, sure, we can go outside and you can beat the crap out of me, but I'm not sure what that really accomplishes." And he and I actually became pretty friendly after that. Like, and trust me, he would have kicked the shit out of me. I like he and I was not excited. Had he said yes, it would have been pretty bad. But it was super rare. I mean, everybody knows the risks of it. It was very uncommon, but I would say in the 4 or 5 years that I was trading before computers came around, there was 1 or 2 fights over those years. There were tons of, screw you, or, F you, you're tons of that. That was every day or every week. But a real fist fight every now and then. Um, Thanks, Tom. I'm glad it was such a great time in my life. Like I said, I didn't realize it. Um, it was a really cool thing to fall into, and the camaraderies. Like I almost wish, like a high school or college, there was a way to have a anniversary and kind of see everybody and say hello. a couple of them. Like I still talk to my buddy Dave, and I are still really good friends. And my buddy Roger, who I don't talk too often, like we've all stayed friends. But some of the others who I was friendly with, even the ones who I wasn't, you create this bond over time that it would be cool to see a lot of them. I mean, this guy Danny Gone used to come in the pit. So my badge, my name was Slim. And as you see, I'm not very slim. And when I was trying to decide what to get as my name, you get either 3 or 4 letters. I said to one of my friends who was a clerk, like, what should I get? And he kind of looked at my stomach and laughed. He was like, how about Slim? Well, it's stuff like that that helped me break into the pit. Like, I was like, okay. And when I got it, other people saw it as humorous. Like, if you were too stuck up or too this or too that, and people didn't like you, it became very hard to get trades. Like I said, it was like being in a fraternity or a little group or whatever, and you build these relationships. And then one last thing I'll yap about, the other thing about the floor, like people think, oh, it was sexist or this or that. We were competing to make money. Nobody cared about man, woman, this, that, or the other. It was just a competition. So people would take stuff personally, thinking it was because of who I am or this. No, it was just everybody wanted the same trades. It was just a fight like that. Anyway, if anybody has a last minute question, feel free to ask. Otherwise, I'm going to go watch the last 45 minutes of the markets and see how they're doing. Uh, I wish I found the cord so that I could get the computer next. I could punch stuff in and look at charts and kind of dig in to stuff if they wanted to know about a specific doc. Anyway, thanks, guys. I'm really glad some of you showed up today. I will do again next week. Keep in mind, in 3 weeks, I'm going on vacation. I am going to try to do it, but we're going to China, and the time difference is so different. I just don't know that I'll be able to. But if I can, I really like the live. Like so. Otherwise, thanks, Lily. I'll see the rest of you next week. Have a good day.